Good afternoon. Or is it? Hello, everybody. Anybody out there? Hey, hey, hey. Couple of you guys are still breathing after today? Yeah, tell me about it. All right, let's do the disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. It's the same as yesterday, but I feel like that can be deceiving sometimes because you don't know my position sizing. Some things I'm lighter in, some things I'm heavier in, but the position disclosure itself is the same. All right, so, oh man, what a day. What a day. One of the worst P&L days I've ever had in my career today. So, shout out to me on that. I don't think it was my worst, but one of the worst P&L days I've ever had today. SPYs only finished down 0.7%. It feels like they're down 10% to me. The Qs are down 0.5%. The IWM is only down 1.5%. Also feels like more than that to me. But yeah, I mean, I don't know what to say. This market, I couldn't be more surprised by the action today. I feel like this is the first day that's taken me by surprise to this degree in like a long time. We have done a very consistently good job over the course of the last few years navigating a lot of different market environments. The 2020 move, then the 2021 bubble, then the 2022 bear market, then the 2023 environment, just kind of nailing almost all the tops and bottoms pretty much throughout all of 2023, and then into 2024 turning, being bullish at the right times, being cautious at the right times, getting back to bullish, knowing when to get back to bullish. It's been really consistent on the big picture, and today just completely took me by surprise. The market technicals coming into today's trading session are super bullish. The sentiment is not extreme on the upside that would give you a warning signal. The positioning information doesn't seem to be extreme to me that would give you a warning signal, even though we did start to notice at a certain point this week that maybe the risk is to the downside, where in a down market the CTA selling is heavier than the buying that comes in a flat to up tape. It didn't seem to be at a point that was flashing warning signals. One concern I had just coming into basically yesterday was Nvidia for obvious reasons, most important company in the universe right now, and then Nvidia reports this stellar earnings report. Even after all is said and done with the weak market today, Nvidia is still up 9%. So Nvidia did its part. And, I am a technical analyst. So if the market is giving me that full all clear bull sign, there's no extension, and beyond that, the positioning and sentiment information isn't seeming cooked or anything like that, I play the game. I go for it. And I trade based on what I feel is risk, reward, and probability of success in any given environment. And if you told me, even now it's almost impressively difficult to believe that you could get through that Nvidia report, have it be so good that it'd be up 9%, have the market build out this bull flag and all the information that we know, and that we would have a bearish engulfing candle today that wipes out not only is a failed breakout in the SPYs, which that was our first concern this morning when we lost 531.50, but all in the same day, breaks breaks the lows of the support of the bull flag, and it's particularly bad if you look under the surface. If you look at, even when the spies were basically still flat on the day, we were looking at how bad RSP was trading and how bad the IWM was trading. I commented fairly early on in the day when the Qs were still green, and the Qs did close red today, right? Yeah, they did. I'm losing my mind. When the Qs were still nice and green and the spies were only flat on the day, I was like, wow, I got 25 long swings on, and 24 of them are in the red. Pretty quickly, that was able to become 25 out of 25 were in the red. Yeah, this heat map that Jim showed earlier and Bill just posted right now is incredible to see that NVIDIA up 9.3% in that bottom left-hand corner, and red everywhere else on the screen except, I guess, General Electric finished up 2.7%. That's interesting. Um, just destruction everywhere you seem to look when you look at that heat map. So, it is what it is. We trade in a game of probabilities. I wouldn't necessarily do very much different if I had foresight on exactly what was going to happen through a crystal ball, because I'm kind of happy with how I positioned myself. It just, the market totally failed, and today is a day to take notice of. Today is a day to take notice of, in the same way that April 4th was a day to take notice of. April 15th was a day to take notice of. Last July, this was a big one. July 27th was a day to take notice of. Um, and today, those are the four big, that's what I always call them, a day to take notice of. They're days that represent a potential character change to the market. And the last three of those day to take notices of did turn into more real follow through to the downside. There's no way to say that this one will as well. Um, and again, for me at least, and this is probably what's affected my P&L so much today, is that all those other day to take notice of that I just pointed out, those really important three trading sessions, and I would say that this is the fourth really important trading session from a technical perspective. I felt like each time we were really prepared for it. Back in the end of July of 23, July 27th here, it was, sentiment's getting extreme, positioning's getting extreme. There's becoming a ton of risk to the downside. Oh, bam! Here you go. Here's a technical catalyst, a bearish engulfing that confirms all the other data that we're talking about. And then, that the data started to push a little higher in like mid-February and into March, and we were, going through all of 2024, talking about, hey. The positioning data here is giving us some risk to the downside. Let's be a little bit careful, but we are in a positive gamma environment. The trend is your friend, and the trend is higher. But it was almost like we were ready for it when this day actually hit. I know that was caused by geopolitical concerns as the reason, but sometimes it's all you need. You need one catalyst that creates the technical change when you're already in an environment that's set up for it, and then that's what leads to the move lower. So you had that one on the 24th that began to end the uptrend, and then you had the breakdown continuation day on the 15th that flipped the trend from being an uptrend that's broken, which was more neutral, to actually breaking down and becoming a small time frame bear trend that led to pretty big pullback of an additional 4 trading sessions in a row after that. And then, coming into today's trading session, I think that the biggest difference, at least for me, compared to those other really important trading sessions that I'm describing, is that not only was I not prepared in the same way for a pullback as I was on those other few days, it was the opposite. I was extremely bullish coming into today's trading session. It looked like we were getting a breakaway gap to the upside of a bull flag right after we got through our final event risk that came out to be beyond 100% okay. The NVIDIA report literally couldn't have been better. And it's like, wow, this market looks like it's totally set to go. and it just 100% failed. So, had a lot of long risk on today, and we couldn't get the bounces in the right spot, and it totally failed. The interesting part about today's session, also compared to some of those other ones, though, is that I still don't think that the layers of probability are really there for a downside move, outside of the fact that this is a very technically bearish candle. It's a bearish engulfing candle here on the SPYs that fully encompassed the entirety of this bull flag that's been built out over those days. It's a bearish engulfing on the Qs, not as bad. It's just into the 80 MA on the daily. But again, keep in mind, this is with NVIDIA being up 9% on the day and gapping up as big as it did. And you want to see where the destruction is. Look at this Russell. On the one hand, the Russell's still above 202, which is a support area. It's still above 200, which is hugely important. But this is a nasty, nasty candle for the IWM. The IWM, I don't want to make this comment too extreme, but in some ways erased the entire month of May today. We were already a little bit off highs because of some relative weakness coming into today, and yesterday was a little bit weak in the afternoon session. But in some ways, today, or especially if you want to include yesterday, we pretty much engulfed the entire month of May in a bearish way. But the interesting part about it is we are still in a positive gamma environment. There should be some support to the downside, but we know in a down market right now, CTAs are selling into it. So there was definitely, and I know Bill was providing I think it was Bill, was providing a comparison of the tick chart today, that negative 1,000, which basically just shows that it was sell programs in control for the day, and you can feel that those sell programs being in control when you watch how the selling is actually occurring also throughout the day. The selling here was very orderly. There was never any sort of downside capitulation or anything like that. This was just very orderly selling throughout the trading session. It was just de-risking coming in, I guess hitting probably at a certain point, I would assume, some triggers on the downside that were just leading to selling coming into the market. But the interesting part is that I still don't think that we've got full signals that indicate we should be getting some sort of a bigger correction here. And one of the things that hit us down was the number that came out at 945. Which I don't have memorized what those numbers were if everybody wants to repost it. But it came in hot. Economy's still too strong. Okay, fine. We get a downtick. We get a downtick here at 945, and the TLT interest rates move higher. So what should happen off that? The IWM should be relatively weak. Interest rate sensitive stocks should be relatively weak. The market itself should probably take a hit, though maybe you see some relative strength in the NASDAQ. Thanks, Bandit. The PMI composite flash. Yeah, you can just read the numbers here. All coming in hot across the board. The economy is too strong. So, based on that, I'm not surprised to see this quick downtick here in the TLT. Interest rates move higher, quick downtick in the market. We've seen this happen plenty of times in the past, and we've seen it recover plenty of times in the past as well. But it's concerning, and it should create market weakness. The interesting part is this bottomed out at 11:30, and the market didn't even really have its breakdown for the SPYs, at least, until 1 o'clock or after 1 o'clock. And the IWM did get hit the most at 9:45. Bounced a little bit when the TLT bounced post 11 o'clock, but then also really broke down with the market. So at first, in the beginning of the day, I was attributing, I think I even said at a certain point, man, I would really love to see where this market was trading if those numbers came in line, just in an alternate universe, out of intellectual curiosity, because you still have NVIDIA trading so well, and it just seems like the Qs are holding in, everything's kind of holding in, but again, the IWM's getting hit, interest rate sensitive stocks are getting hit, and it makes sense. So I would love to see just how well we'd be able to hold in an environment where that number came in line instead of coming in hot. But the afternoon trading session, almost to some degree similar to yesterday's afternoon trading session, when you compare it to a chart of the TLT and interest rates, that's kind of what's making me scratch my head almost more than anything else, because you had this TLT round up and bounce, and by the way, it's still above 90. if you got, it was just a little over a week ago that we were talking about, wow, if the TLT could, or maybe it was 91. Actually, now I'm looking at it, it's 91, not 90. But we still we closed at 91 or even slightly above 91. It was just a week or two ago that we were talking about this 91 level in the TLT and saying like, wow, if we can get above this 91 level in the TLT, it's going to be so supportive for markets. Okay, well, guess what? TLT pulled back and interest rates bounced, but it didn't even break the $91 level. So it shouldn't really be like that big of a deal that's causing this degree of selling. So even a little bit at the end of the day here, I'm honestly scratching my head about this market. I don't understand why we sold the way that we did today. Fine, the number came in a little bit hot. It's going to create a little bit of weakness, but it shouldn't have created this degree of weakness. Nvidia was just fine. I don't know. I really don't know, but I don't need to know, and that's important also, because the technicals are the most important thing, and the technicals are telling me, hey, you're not the smartest being in the universe or the markets. We had a bearish engulfing candle. Your thought process and your idea was wrong. So manage risk and manage your process accordingly. And that's pretty much what it comes down to. But for myself, I'm looking at my P&L and I'm not liking the number, but it's I'm not like overly upset about it either, because it goes back to what I was even talking about in the afternoon meeting either yesterday or the day before yesterday. I got to ask myself when I look at my P&L and look at the amount that I'm down, did I put myself in the position to make money? Did I do the right things? Did I follow my game plan? Did I manage risk accordingly on a failed idea? Because, I don't care how good you are, you will have periods of time in the market when you fail. And if my answer to all of those questions is yes, then I can't be upset at my P&L. In truth, the answer to all those questions is like 93% yes, and probably 7%, me not being a perfect trader and fighting a little bit in certain spots. But at least for the majority of the negative P&L that I'm looking at today, and like I said, it's a big number. It's one of the worst days I've ever had. I just can't really be that upset by it, because I don't feel like I did anything wrong. And like I said, if I could go back and redo today, I probably would redo today almost exactly in the same way that I actually did it, based on the information that I knew coming into today's trading session. So, is what it is. There were some early warning signals out there today. None of them came from Nvidia, but it was really interesting how fast we saw like that AMD spike to above $71, which is a big breakout level. I mean, pretty much every idea that we were looking at for the most part, except maybe BJ's. BJ's did pull back pretty hard. Pretty much every idea that we were looking at in the morning, or that were my ideas, failed. AMD, which I still have the position in, it is still above that 155 or whatever that we bought. But AMD was looking for continuation above 170. Some things opened up very extended to the upside. It was not the end of the world when AMD lost 170. It was not the end of the world when the SPYs lost 531.50, which you really didn't want them to lose. Remember, 531.50 is the resistance level of the breakout. So you're gapping above 531.50, that makes it a potential breakaway gap. But you have a big gap. So sometimes you get a pullback and a big gap. That's normal, but you want to see that pullback, ideally, hold the previous resistance level of support. Now, when it's happening early enough in the day that the ADMA is still all the way down a dollar below that, and you want to tail a little bit below 531.50, you want to overshoot it and snap back up, that's going to be just fine. AMD, this candle here, honestly wasn't the end of the world. It's bigger than you want to see, closed deeper than you wanted to. You lost 170, but with that degree of extension, not the end of the world. But there was no bounce. You can overshoot those levels and those big gap ups a little bit and still recapture them, create a pivot low, have it be a great buying opportunity, get back above. Look at this. No pause at the 80 EMA, no pause at the 21 EMA, no pause at the gap fill, no pause anywhere. This AMD went basically straight down from $173 to $160, which is wild. So you had that going on. We're looking at Micron for 130 as a potential secondary trade off of NVIDIA. It also gapped above. It's also a potential breakaway gap up above that big resistance level. Okay, fine. You're messing around here a little bit at this 130. It's not the end of the world. I actually love this 940 candle as something that you could buy versus this low of. Not quite to the 80 MA, but they really overshot this thing down, brought it back below the level. Again, I keep repeating myself. Not the end of the world to get below the level briefly when there's a lot of extension. And it tried to tail back up, tried to get back above 130, broke that low, broke the 80 MA. I mean, this one at least tried. AMD never tried. This one tried in a few circumstances, but ended up, holding 130 as resistance at 1015, breaking below to that new low, and just another one that just totally failed. How about snow? Snow report, I thought was a pretty good report. A little bit of a concern on the margin number we saw after hours yesterday, but everything else looked pretty good. It was able to maintain its bid after hours yesterday. It was able to maintain its bid this morning, looking like a breakaway gap above this like 165, 166 area on an earnings report with no real resistance to the left. A little bit at 170 and then nothing till like 194. There's another one. We're 5 minutes into the trading session, scratching our heads like, holy cow. Sometimes you see a lot of volatility on earnings moves. Wouldn't be the first time I've seen a very sloppy earnings trade that goes from red to green and then from green to red and then red back to green and then is sloppy all day or eventually breaks up. But this one on what seemed like a good report just destroyed. Lost 165, didn't even attempt to bounce at 165, lost 160. There was a little bit of an oversold bounce that finally came in at 155 that actually led to a potential short setup on this pivot high into the 80 MA. So I don't know. The point, I guess, is that there were just like lots of signals out there that levels weren't holding. The appropriate spots were in a strong environment. Buyers should come in to create a bounce, like those first tests of those equilibrium areas, those first tests of the gap fill areas. There were no buyers to be had at any of those spots, and that was some of the initial signals. And then that afternoon session just came in and just washed us away to the downside further. And again, at the end of the day, we're just left with these pretty nasty bearish engulfing candles. So we'll see what happens. It's a day to take notice of. I think that my approach, which has been very bullish since we got back above 515 in the SPYs, and from a market perspective has worked out really well. That today's candle says take a step back. This is what I also like to call a penalty box candle. It puts the market in the penalty box. You can't just come out tomorrow and be gung-ho to the long side. You need this candle to get negated. And negating this type of a candle, notably not on massive volume today, negating this type of candle is typically not an easy process. The rarest way in which it happens, which could happen, you never know, is that tomorrow we just get a big green day and we're above today's high by tomorrow's close. That'd be very rare. Usually it's more of a process to negate this candle. That's assuming that you're going to negate the candle, right? This is the bull case. The bull case is we get an inside day tomorrow, and then next week we get an inside and up. The bull case is we get a downside tail to, 522, 523, but we close back at 526, and then or even a little bit higher, and then we can get continuation next week. That's the bull case. The bear case technically is this is a day to take notice of, and it leads to something like this off this last one that happened on April 15th, or potentially even something like this, which isn't as bad, where you get the inside day after that, but you don't get the bounce, you don't get the break of the inside and up. So you just kind of consolidate and go sideways further. Um, that's more of the bear case. So when you're reviewing the probabilities after a day like today, what it tells you is even if you're bullish, you have to have a little bit more of a neutral approach right now. And if you're bearish, which I still find it difficult to be outright bearish right now, despite this candle, but again, it's a day to take notice of. If you're bearish, if you have a fundamental thesis that's bearish, then you got to grab the reins here and push it, and you got to look for this multi-day down move that comes off of this that retraces us back to other key levels. So, I think that the thought process that we have had now, and it's been pretty successful for over a week of just kind of outright bullishness, is out the window off of today's candle until and unless the market can prove itself. We've been saying on the way up, I guess this will be my final thought. We've been saying on the way up, err to the side of being long, but watch out for your extension. Be bullish. There's no point in putting shorts on. And I still stand by that thought process until today. But now today just changed things. We said that you either want to get short because one, we have $10 plus of extension and the market's extremely extended, or two, we get an event that creates a technical change to the market. Now I still don't know what that event was, but something happened today that caused a technical change in this market, and that can enable people who are, whether you're bullish, bearish, or neutral, to put more shorts on or to not be as gung-ho to the long side. So, yeah, that's all I got. I am happy to answer any questions that any of you guys have. I'm just signing into the YouTube on my other screen. All right, I'll start with the VTF. I think the first question I'm seeing is from Tate at 418. So if anyone put in a question prior to that, please repost it. Do you think this could lead the SPY to test the 21 EMA, the bottom end of equilibrium, for the first time in this uptrend of flows, or is there potential for something more? Very hard to say on the something more part, but we definitely have the potential after today's candle to retest the 21 EMA, which is down at 521. There's some support at 520. So we, it's kind of like I was just saying. This is a day to take notice of, and there's a decent probability, even in the bull case scenario. One of the two bull case scenarios is still that we break today's low tomorrow and create a downside tail, right? That's the bull case scenario. So, a test of the 21 EMA would be very reasonable. And whether or not that leads to something more, I still think is too difficult to say at this point, because like I'm saying, there's still a lot of evidence out there that I think is still relatively bullish from a sentiment positioning perspective, sentiment and positioning perspective. From a technical perspective, even though this is a day to take notice of, we're not in downtrend. We haven't broken the uptrend. There's no pattern of lower highs and lower lows here. It could also mean that we just need to range much further. I mean, what's the market up? 10% on the year? Is that right? Is that number right? I don't remember. But it's still, not bad for 5.5 months in. So we'll see, Tate. We'll see. Scrolling through here. Michael G. Candle today is eerily similar to the bearish engulfing we saw at highs last July, which was the pivot high to October lows. Yeah, for sure. So that's one of the ones that I referenced as well. Really going all the way back to July, I feel like there's 3, now 4 of these major days to take notice of. One of them led to a 10% correction in the market. One of them led to a break of an uptrend. One of them led to a 5% correction in the market. Will this one do something similar? It's hard to say. I would still point to, it's one of these candles, but I also don't feel like some of that other macro information is as bearish right now as it was during those 3 other periods. So we'll see, but not a good thing. I don't see the TLT as being in a downtrend. Okay, actually I take that back. If you're very big picture and you want to go back to December's highs, the TLT is still in a really big picture downtrend. On a small picture, you have an uptrend. If you're like a small to intermediate time frame picture on the daily chart, you're in an uptrend still, which is kind of being retested a little bit on the downside. So what's going to win, this bigger picture downtrend or the smaller picture uptrend? Usually the bigger picture trend is what wins. So we'll see if that happens. But we're still above the key level, which is this $91 level. And that's one of the things I'm referencing, going back to the SPYs or the market off of what Michael G just said. When I'm talking about how I don't feel that all of the other pieces of information are lined up to the bear side in the same way that they were last July or April of this year, TLT would be one of the things that I would reference because it's still above that $91 area. You show me that TLT really starts breaking down and really gets back below $90 and is closing below $90, then I would say probably the opposite. That now it's actually become a layer of probability that this candle leads to something more. But for the moment, we're still above it. And again, the positioning and sentiment information, which is never 100% accurate, and it's not a screaming buy by any means either. It doesn't seem to be indicating as much of a sell as April and July were. So we'll see. Nothing else in the VTF for the moment. Popping over to the YouTube. My market plan today was potentially fill up the gap down and then buyers step up together with NVIDIA to the long side. Would you say that the 945 candle from the TLT and the reaction to the PMI numbers would be a prediction of the entire market sell-off, especially in the afternoon hours? Yeah, so I think I went over that in a lot of detail already earlier, kind of in the meeting, and I think you posted that question pretty early. So I think I covered it already, but can do a quick review again. Yes, I do think that this TLT candle here at 945 was a signal of market weakness, particularly for the IWM and growth stocks, not necessarily for mega cap Q stocks. So I still think that your game plan of looking for like the gap fill in the Qs and NVIDIA or a pullback to equilibrium to be able to buy, I think is still even an okay game plan, even with the TLT sell-off at 945 and what kind of came from that. Because one of the most interesting things to me is that this TLT bottomed at 1125 and rounded up for the rest of the day, but the market didn't have its bigger breakdown until 1 o'clock when this was well off lows. So that seems to indicate, at least to me, that while the hot PMI numbers and the move in interest rates had a negative impact on the market, that wasn't it. It wasn't all it. That there's more to it than that. So yeah, and again, I generally like your thought process and game plan coming in for today. I had the same one. Be patient off the open. Let's see what the market looks like. It's super bullish. Let's be long, but let's be a little bit patient into a really big gap up. Let's see what we look like after 15, 30 minutes when that small time frame equilibrium catches up. From Gabriel, what a nasty sell-off. I was up at the open too, just to have it be one of my worst days. Just to be negative on the day. I sold off some swings that were green into the close to pocket some open P&L from the past weeks. Yeah, I can't blame you for doing that. I, for myself, am probably I was really, really trying not to overly size down today and to give this market a little bit of a chance, which is also probably one of the reasons why my P&L is so bad. And even into tonight, I haven't too much. But if we can't get like a recovery inside day tomorrow, depending on how we're set to close tomorrow, there's a decent chance, depending on how we close tomorrow, that I'm going to do like a very good bit of de-risking. Unless I see that we're able to get an inside day that closes okay, or we have a V bottom intraday where we close okay. If we close okay, I probably won't de-risk too much. But if we don't close well tomorrow, there's a good chance that I'm also going to do a lot of de-risking. Some of this stuff is, been pretty good to me, and I'm never afraid to give back P&L. I think we know that, but there's also a limit to it. So yeah, some more thought process. I'm just trying to give it a little bit more time through till tomorrow, but I don't. And we'll see, because we're going into this 3-day weekend, and which on the one hand, market participants, because I'm one of them, might say, hey, I don't need to have this much risk into this 3-day weekend right now, even if our geopolitical concerns have died down a little bit. That's kind of where my head's at. We can't recover well tomorrow. I don't want to have this degree of stock into a 3-day weekend. Do you think we can short a gap up tomorrow as a hedge and individual trade? Potentially, if the gap's big enough. See what sort of retracement you're getting on it. I haven't really thought of that. I usually do that type of research in the mornings. But you might be able to short versus like 529 in a big enough of a gap up. Yeah, ELF, I did look at that one real briefly. That was a surprising one because it initially ticked down. I didn't really look at the numbers on this one, though, to be honest, so I don't have an opinion on it. But it was an interesting reversal back up on that ELF. The opposite of snow. Uvixi Bull, I tried 3 longs today in the NQ, trying to play a bounce at 11.25. You focused on the right index. At 11.25, oh, that's when we got that retest. I almost forgot this even happened. We got this retest of this 4.59 at noon. And the way we ended up sound off and the way we closed, I almost forgot all about this till right now. We had this retest on the upside at around noon today where it looked like the market was going to break back out. And then it failed, obviously, miserably. But yeah, I don't mind that first long at all there, and you're going after what's relatively strong. Try it again at 115. It's a tougher trade, I would argue to you at this point. What the heck is the market doing here? Fine. Opening weakness, they overshoot it. We were talking about this in the beginning of the day. I wouldn't have been surprised to see the market close on highs after we sell off for the first half of the day because it's been so common. We have very commonly seen, even in a strong market environment, that we're weak in the beginning of the day and then we round up into the close. I blame 0 DTEs for a lot of that. Sorry, I lost my train of thought for a second. I blame 0 DTEs for a lot of that. But then if that was what was playing out, we shouldn't be down here. We should have been holding up here, and then you can close your eyes if you've been trading in the last year or two, and see in your mind's eye what I'm about to describe because it's happened so often. Gap up, sell the gap, overshoot it, break this pivot low, fully fill that gap. Next thing you know, just when you're frustrated and ready to throw in the towel on being long because we don't get any opening continuation, market snaps back to some intraday resistance. 1 o'clock comes around, that intraday resistance breaks, but you're not even looking to buy it because it's 1 o'clock in the afternoon, and who's trying to be aggressive midday? It's usually not good. And then you just go into this like grindy up move, get a quick little spike somewhere, grindy up move, and you close at 460.50. Easily could have happened. So I like your long here at 11.25. I don't like your long so much at 115 because I don't think that we should have pulled back down to that spot. And then 125, fine. Maybe the market's trying to hold here and bounce a little bit, but I don't really love that one. Oh, 215, you mean? Yeah, but by that point we're shot. I mean, at this point you're looking for an oversold bounce trade, which for me, and to give myself, if I can give myself any credit on today's bloodbath for me, it was I called out the low to the team pretty well. And, so just recognize at this point at 215, you're looking for the oversold bounce. But that usually doesn't happen between 2 and 3, right? Usually those counter trend moves to how the entire market was trading occur in that last hour or last 30 minutes of the day. I have consistently found that in down markets, buying, between 2 and 3 p.m., or in those really strong markets, selling between 2 and 3 p.m. is too early. And that you get that counter move in the last 30 minutes or last hour, particularly, again, imagine to the upside where you just have that all day upside grind and then it rolls over in that last 30 minutes or last 1 hour. Usually what's going on there is like the day trader buying people and algorithms that are just intraday, that are trend following, are booking profit in the last 30 minutes, which causes a little bit of a technical break to the downside, which causes then more selling. This is like the same thing but the opposite. Can we get this oversold bounce of today's trading session into the close? It's decently probable. And for me, the signal that had me call it out was the IWM not making new lows at about 3 o'clock here, when you can see the SPYs spiked down to new lows and the Qs spiked down to new lows. And that's interesting because the IWM was what was leading the weakness all day. So when I saw that, I'm like, oh wow, look at these SPYs break new lows. Look at this 3 o'clock candle specifically, was one of the things that I was looking at. You get this nice uptick here. The SPYs also upticked, but then got hit right back down. You can see the upside tail. The Qs, you can see the upside tail. The IWM, there is no upside tail. So now all of a sudden they're buying back the weakest part of the market here a little bit. Okay, fine, we get like one quick new low in the SPYs and the Qs, but the signal that we're firming up is there. So that was probably my best call out of the day, to be honest, even though it didn't give a lot of follow through. But the IWM was able to give you a dollar bounce. SPYs, the SPYs gave a dollar bounce. The Qs gave a $2 bounce. The IWM bounce was a little more anemic, 75 cents or so, which actually I was disappointed. My disappointment into the close was that this didn't bounce more, considering the strength that came in at 3 o'clock with what I just showed you with the SPYs and the Qs at the same time. That if then we were going to get that round up into the last hour, I wanted more from this. If the Qs were going to make this new low and then bounce $2, I wanted the IWM to not make this new low and bounce to 204. And it didn't happen. Sticking with the YouTube for a second. So yeah, that covers from you, Vixie Bull. On Gabriel, I know ARK has the worst risk in trade management, but it looks like there was no uptrend at all going back to the 52-week lows. No short-term uptrend during the market bounce back to highs. Yeah, now ARK and growth have been a disaster still this year, despite the fact that investors have finally started to puke out. So yeah, I mean this ARK is just been garbage. I agree. From Kevin G, given Monday is a holiday and no more macro news tomorrow, how much could be attributed to the market selling into the weekend? I don't think very much, to be honest. You mean for today, right? Not for tomorrow? I'm assuming you're meaning today's price action, that some of it could be attributed potentially to being a 3-day weekend. I don't know. I feel like that same thought process could happen in the exact same way to the upside, though, where it's just like, the market participants are already on vacation, the buy algorithms are on, the volume's very light, and we're just moving higher. So, I don't know. Tomato, maybe. Could have an impact. We'll see what happens tomorrow. But tomorrow will probably be a little bit more boring, but it'll be interesting to see within the confines of the boringness what it actually looks like. No idea on tomorrow's opening, Apex Joy. We got to assess it in the morning. I could see us gapping up tomorrow to frustrate people. I could also see us just gapping down because of a continuation of today's weakness. I'm really uncertain about it. Gotcha. Yeah, Kevin, I think so. Back over to the VTF. Bill giving me a chart. SPX. That's not SPX. I don't know what is .sox. What did I just type up? Anyway, SPX just barely recovered to the prior all-time high. This is a really good piece of information. We just got back to the resistance that we broke out from with today's candle. Is kind of what you're telling me. End of quarter highs to close. RSI 2 closed in oversold territory, just like it was on the way down in April, but also like it did on 4/4's big outside day move. Okay. Ton of VIX July 20 calls were bought today. Where did that VIX end up at the end of the day? It's a big bounce back in the VIX. It's still a 12 handle. It wasn't the same, but it felt very similar to the January 12th prior to MLK Day when 50 Cent bought 250 February 17 calls and VVIX shot up. Did that trade ever work out for him? It might have. If he still had it here on February 13th. I don't remember which date the expiration was for February. The trade might have worked out. I forgot about that. But you bring up, I think, some interesting notable points, which, if anything, I would put some of this stuff still in the bull case when I'm talking about the fact that today's a day to take notice of, but I don't feel that I have the same confirming factors as some of those other days to take notice of. Thanks, Bill. That we just retested the breakout. So we didn't actually lose that major support in the SPX here of the retest of the breakout of the year. So that is another piece of information that maybe says today's candle is not the end of the world, but I would still say it's a penalty box candle and we need to have a constructive way to negate it in order to really feel bullish about this market again, and then we have to proceed with some caution until we get that set up and it's confirmed. Thank you. David L. Keep hearing sell in May and go away this month. Another seasonal market trend, or has this year been a little bit different? I would say that this year has been a little bit different. So sell in May and go away is a common trader seasonality saying because summers tend to be a little bit weaker. They tend to be a little bit of a weaker point throughout the year. It's sell in May and go away. And I don't remember the other part of the rhyme, but basically the bullishness of the market comes back in mid-September. So the idea is that you sell in May, take vacation for the summer, come back in mid-September and start buying stock again. One thing that I've learned a little bit more recently in my trading career, I was never a believer in seasonality at all. My thought process, and this thought process is still correct, has always been, well, just because something has happened in a previous year in this week doesn't mean sell in May and come back on Labor Day. Thank you. Doesn't mean that it has to happen this year. We work in probabilities. But more recently, I've learned that there's a degree of market structure that creates that seasonality and therefore actually gives way to a higher probability of that actually occurring. I don't know what that would be for May, but the data we saw coming into the beginning of May, if you remember, the beginning of this month, we were joking, but we're kind of serious, buy in May and go away. And we're saying that because the saying has always been, my entire trading career, it's always been sell in May and go away. And I'm like, well, the data is showing here in the beginning of May, which is back here, by the way, that we should buy this May and go away. I think that was even the headline of one of Bank of America. After I was already saying it, or I already said it, I think that was even a headline of one of Bank of America's research notes in the beginning of May that talked about just kind of positioning in the market environment and how we're set to move higher. And I mean, look at the month of May. despite today, I mean, today was a bloodbath for me, but it really wasn't too bad on a percentage basis for the S&P or the Nasdaq. And what is this percentage move that we're up on the month? From lows $500 to today's close 526. It's still not bad. Now that my kids are in public school, it seems like a lot of the seasonality has to do with school vacation time and their breaks in general. They end in May and start in September. Yep. These people are too busy taking care of their kids and hanging out with their children when they should be studying the market and trying to pull out every penny that they possibly can. Who needs family? That's a complete and utter joke. Family's the most important thing in the world, and you should always spend time with them when you have the opportunity to. Seen some other commentary coming into the YouTube. Will I buy the dip in Bitcoin? No. That's my answer to that question. From Robert, sell in May and go away. Don't come back until St. Leger's Day. I got no idea who that is. I've never heard of that one before. I know you're over there in Europe somewhere, so must be must be some Euro thing. This is the idea that the period between the end of April and the running of the St. Leger Stakes, a famous horse race, must be a European horse race, on the weekend in the middle of September each year, is a dead zone for the market. The quote comes from the London market. Yeah, those British people. Robert, I'm going to be in London for a week in June. If you want to shoot me an email, maybe we can get together. All right, on that note, I'm going to wrap it up. I hope you guys had better P&L today than I did. And I'll see you all tomorrow. Yeah, Pat, you get the summer off, bud. Go take it easy. Give me your account. I'll trade it for you.